Good evening. Today's trading was a tale of two halves. The market started off nicely in the green, being up around 1%, but ultimately they ended in the red due to coronavirus fears. The S&P 500 ended the day in the red by 0.56%, while the Dow was down an even worse 0.8%. The Nasdaq eked out a very small gain, ending the day up 0.03%. Today's news again is focusing on the coronavirus. Yesterday, the U.S. reported a gain of more than 27,000 positive coronavirus cases. As of Thursday, the nation's 7-day average of new COVID 19 cases increased more than 15% compared to a week ago. Cases are growing by 5% or more in 27 states across the U.S., including Arizona, Texas, California, and Oklahoma. New cases hit a peak of 31,630 based on a 7-day average on April 10th before steadily falling to an 8-week low in late May. But the average showed an increase in the last week. Meanwhile, 17 states and Washington D.C. have reported declines in cases, including Connecticut, New Jersey, and New York, which were once considered the epicenter of the outbreak in the United States. According to the World Health Organization, the coronavirus pandemic has entered a quote, new and dangerous phase. Due to the recent rise of coronavirus cases, tech giant Apple announced that they would be closing 11 of their retail stores again. These 11 stores are spread across Florida, North and South Carolina, and Arizona. Stocks gave up their gains and turned negative due to this news, and in particular, hit brick and mortar stores the most. Quote, due to current COVID 19 conditions in some of the communities we serve, we're temporarily closing stores in these areas. We take this step with an abundance of caution as we closely monitor the situation, and we look forward to having our teams and customers back as soon as possible, according to an Apple spokesman. After Apple's announcement, it was revealed that the major cruise lines have agreed to voluntarily suspend all trips out of U.S. ports until September 15th. The previous suspension was for July 24th. The CLIA, which stands for Cruise Lines International Association, said, quote, due to the ongoing situation within the U.S. related to COVID 19, CLIA member cruise lines have decided to voluntarily extend the period of suspended passenger operations. It is increasingly clear that more time will be needed to resolve barriers to resumption in the United States. Shares of the cruise lines all took a hit due to this news and fell more than 6%. No one had as brutal of a day as utilities, as it clearly was the laggard out of all the sectors. Today, utilities were down more than 2.2%. Oil and gas lost slightly more than 1.1%. Clearly, no one performed better than healthcare, which gained more than 1.1%. Value stocks were hit hard yet again, as mid-cap value had the worst day, being down 1.4% on average. Core stocks as a whole also posted a rough day all across the board. Small and mid-cap growth were the only two baskets of stocks which were able to end the day with a gain. The best performance of the day in the S&P 500 came from pharmaceutical company Incyte Corp. Today, shares of Incyte gained 8.26%, but there was no catalyst to support this large move upwards. Regardless, shares of many pharmaceutical companies were up a good deal today, leading us directly into the next stock. The second best performance came from Regeneron Pharmaceuticals. Shares of Regeneron gained 7.8% during regular hours trading. Regeneron's gain came on the news that the FDA had given it an okay for the drug Dupixent, which is aimed to help atopic dermatitis and asthma for children under the age of 12. The stock with the worst day in the S&P 500 was Popular Healthcare Facilities REIT Ventas. Today's large drop of 9.02% comes on the back of news that Ventas cut its dividend by 43% to 45 cents per share, down from the previous 79 cents per share. With this news and fears of a second wave of the coronavirus, it was a perfect storm for Ventas. The other stock with the worst day was another REIT called Welltower, which focuses on senior housing and assisted living real estate. Shares of this REIT were down 8.62%. No firm-specific news was released, but I assume shares were down largely due to fears of the second wave of the coronavirus. Getting into earnings, we start off with CarMax, ticker symbol KMX, which is America's largest used car retailer. CarMax posted a double beat with their first quarter financials. Non-GAAP EPS beat estimates by 9 cents, as they posted a gain of 23 cents per share on the quarter. Revenue came in at $3.23 billion, which beat estimates by $570 million. CarMax's revenue took a large hit on a year-over-year basis, as revenue was 39.9% lower compared to the same quarter last year. Shares of CarMax took a dip on this news, as shares ended the day down 6.1%. Next and lastly, we have Jabil, ticker symbol JBL, which is a manufacturing solutions provider that delivers comprehensive design, manufacturing, supply chain, and product management services. Jabil had mixed earnings as they missed on EPS estimates but beat on revenue. Non-GAAP EPS came in at 37 cents for the quarter and missed estimates by just 6 cents. Revenue beat by a nice $720 million, as Jabil posted quarterly revenue of $6.33 billion, which represented a growth in revenue of 3.1% on a year-over-year basis. Investors liked the news of this, as shares ended the day up a nice 2.35%. Taking a look at the week ahead, on Tuesday, we get new home sales numbers, and both Services and Manufacturing Purchasing Managers Index, which will give us a glimpse into how managers feel about the economy. Thursday and Friday are both important days to look forward to, as on Thursday, we get our weekly jobless claims update and another GDP estimate. Friday will give us a glimpse into what personal income is currently looking like, and University of Michigan releases its widely watched survey of consumer confidence. That is all I have for you today. I hope you all have a fantastic weekend, and I look forward to seeing you again on Monday.